December is historically a wonderful time of the year for the markets. With the holidays approaching, the mood is positive and the spirits are high. Since 1950, no other month has recorded a higher average return than December. But it is difficult to even think about a Santa Claus rally this week, with volatility ripping through the financial markets. It almost feels like Halloween, October, a month known for some spectacular crashes. Omicron, the latest coronavirus variant, is spooking investors in a way that we have not seen since the beginning of the year. There's been wild intraday swings in stocks, bonds, commodities, crypto, and currencies. The VIX, which measures the stock market volatility, spiked to a 10-month high. In other words, volatility is back, baby. But volatility is not the only thing making trading difficult. As Omicron cases rise, stocks are soaring. This counterintuitive price action makes trading confusing for everyone. Trading is easy when equities and currency moves are in sync with market sentiment, but right now, the markets are dysfunctional, which is why it's important to talk about how to trade in dysfunctional markets. I have 3 tips. Stick with what you know, stick with the trends, and don't get caught in bear traps. For me, what that means is that when it comes to Omicron, we know one of 2 things. First, the news flow will worsen before it improves. And second, the chance of it being as bad as March 2020 is slim. Yes, it is possible, and I'm certainly not a health expert, but vaccination rates are high and the political will to reintroduce lockdowns in the US is very low. Even if it gets as bad as 2020, the economic impact was brief. Stocks went on to hit record highs. So trade what you know. My strategy is ZIP, and that's what I've been trading all week. The stock market price action is confusing. I know that investors are still nervous, and Fed Chairman Powell's taper talk is bearish for risky currencies. So while Eurodollar and dollar yen are trading counterintuitively, the Japanese yen crosses like Euro yen, Aussie yen, and CAD yen moves are consistent with my views and delivering some very powerful ZIP signals. Euro yen, for example, had multiple ZIP sell signals, which are the white candles with a red background that worked very well, as you can see in this chart here. There were also 2 beautiful Aussie yen ZIP sell trades over here on the left-hand side of the chart and over here on the right-hand side of the chart. And 3 CAD yen ZIP sells were triggered this past week. The CAD yen sells were the best because oil prices were falling, giving us an even stronger reason to sell this currency pair. Now, Eurodollar triggered some ZIP buys that worked very well as well, but the move didn't make sense to me because Europe is the center of the Omicron spread, and Powell's comments are positive for the dollar, so I passed on those trades. The second tip is to stick with the trend. That's what ZIP does for me. The background hue reflects the longer-term trend. If it is red, it means the trend is bearish, and if it is green, it means the trend is bullish. This keeps me out of bad trades. I also make sure that I have moving average clearance, which is something we talked about before, so I'm not selling into support or buying into resistance. The third tip is don't get caught in bear traps. There were a lot of them this past week. The biggest mistake is to sell after a huge red candle or buy after a huge green candle. There could be continuation, but more often there's a bounce before a move lower, regardless of how big the news is. You can see a few of those in the following charts, so don't get caught, better yet, tempted by these bear traps. You can see this bear trap in the Eurodollar where it sold off aggressively when Powell said that it's time to retire the word transitory from the description of inflation. Now, that's a really big deal, and we've been tempting to basically join the move. But that was the wrong move because while there was some continuation on this hourly candle, there was a huge reversal afterwards. We also see that in dollar yen. We had a break higher in dollar yen, and instead of joining that move, the smarter trade would have been faded because when it comes to these huge candles that you see, it's much more important to wait for a fresh signal before getting in because you do not want to get caught in these bear traps. We made money trading ZIP this week at BK Forex and even caught some great gold trades, like the sell trade over here and these trades over here, which actually was a triple ZIP sell signal that became a very, very nice move lower. Why did we not take these trades to the long side? The reason was because these sell trades were off of Powell's comments that, it was time to retire the word transitory, which is dollar bullish. So a rally in a dollar is typically bearish for gold, and that's why we focused only on the short gold trades. And that's the way, we make money trading Forex, and that's the way we make money trading gold using ZIP. Keep calm, carry on, and go to bkforex.com to trade with me every day.